Welcome to Primus Wealth's Knowledge Channel in cooperation with Step Hungary. Here we share practical tips and solutions to help you pursue goals with maximum asset protection, absolute privacy, real control, tax benefits, and compliance. In this video, we are going to raise a few issues you need to consider in relation to classic car collections. Classic car collectors view their collection as an integral part of their legacy and want to make sure that this unique slice of their wealth is well protected and included in their estate plan. Although a classic car collection can be a way to diversify your investment portfolio, you must make sure to understand the risks involved. So, before taking this route, make sure to consult with your wealth manager. The very definition of a classic car is a complex question, one that varies depending on the jurisdiction and even the authorities. Classic cars are usually over 30 to 35 years old. Vintage cars are ones that were built between 1919 and 1930, and antique cars are well over 45 years old. We must stress here that age alone is not a relevant indicator. There are many other factors that need to be considered when determining the value of a classic car. Collecting classic automobiles can be a solid investment, but it is not for everyone because of the lack of liquidity, the relatively high risks, and maintenance costs involved. A car collection is very much like an art collection, so when you are making the decision to invest, you must assess the potential cost and the investment return. Involving a professional is important, so you can make well-informed decisions that are in line with your plans. Although interest in classic automobiles has grown significantly in recent years, we must keep in mind that a market like this can always change its direction, so investors should remain cautious. The rarest and highest quality models are considered the most stable in value, and they are probably the most liquid ones in the asset category. The brand and model and whether it is well established and sought after, quality brands tend to represent higher value. The age of the vehicle is an important characteristic, but that in itself is not enough. The condition is very important, as it significantly determines renovation and future maintenance costs. Mileage is another factor to consider, as low mileage may indicate better general condition. Authenticity is key in most cases, as documented vehicles in many cases represent stronger value. Another factor you should pay attention to is the original components, because vehicles with authentic original components are considered rarer, therefore they tend to represent higher value. The optimal ownership structure depends on a variety of factors and must be aligned with your current wealth plan, so you need to consider many details before the purchase of a classic vehicle or the start of a collection. The most popular ownership form is an LLC, but foundations, trusts, and holding companies can also be owners. For many, these assets are very private and form a special part of their legacy, so finding the best long-term structure that enables them to finance, own, and sell their collection in a tax-efficient way has utmost importance. Buying a classic car can be a smart and joyous investment at the same time, but you must keep yourself from making impulse decisions. Patience and working with an expert will serve you well in the process. If you have any questions, please visit our website or contact us.